Welcome back to Breaking Bitcoin. We are live every evening at 9 p.m. Central Standard Time, your evening source for everything markets and finance. I'm your host, Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. Hopefully you guys are doing absolutely fantastic this evening. We've got a great show for you today. Of course, is Friday, TGIF, April the 3rd, 2020. Let me know how you guys are doing in the live chat. I see Tom, I see the Pie Guy, I see Jack Midwest as always. Robin from the Hood. Shout out to everybody watching on DLive, YouTube, Twitch, and on TV with the Roku Investor News Channel app. If you're watching on YouTube, make sure to smash the like button, and you will also enjoy following us on Instagram or Twitter, where we post exclusive content you won't see anywhere else. Of course, YouTube has moved away from the subscription model, so if you want to make sure to get notifications, make sure to turn the bell icon on with all notifications. Now, we've got a lot to cover today. We're going to gloss over the fact that Tether printed 1.5 billion USDT. We're not even going to talk about that, right? We're not even going to talk about that. That's already been covered. Today, we're going to be talking about Binance attempting to cover its tracks. Visa apparently backtracking on the agreement that they had with Binance for their cash card. And of course, we've had crypto.com launch their card. Coinbase has their card. There are lots of different merchants and service providers with different forms of credit cards that allow you to utilize your cryptocurrency balance, right? Whether it be Bitcoin, Ethereum, USDT, USDC, it doesn't really matter. There's lots of services that provide that, but a lot of individuals were excited that Binance was going to be doing this because Binance was going to reach into countries that other providers, other service providers were not, okay? This is a kind of big thing. Remember, in Bitcoin, often individuals in the first world countries, we can get very, first world centric and realize that the innovation, the development, and the adoption of cryptocurrencies and Bitcoin happens on the edges of the developed nations, not in the center. Again, I've said this before. San Francisco, Silicon Valley does not understand cryptocurrency. They think it is the next big IPO. They think it is the next big tech innovation, and it certainly is, but not the way that they think. It is a new form of sound money. Now, again, here to dispel the myths of modern monetary theory on a daily basis. Anyways, we're also going to be talking about a little bit about the mortgage crisis. I think we're largely going to gloss over that. But the CBDC, which is the passion topic that we talk about all the time because we are moving to a cashless society. It is going to be happening in our lifetimes relatively soon. We are going to see central banks and governments around the world push for a cashless society. So making sure that you are prepared and ready for that is something that I am passionate about, that my team is passionate about. So we'd be talking about the latest updates on that. We covered this just a few days ago. France's latest hack on this now, bringing you an update from the Bank of International Settlements and the latest report that they just issued talking about how the current global pandemic is going to be pushing societies toward not utilizing cash. And we'll talk about the differences in Western societies versus Eastern societies and the fear over utilizing cash. Contaminated cash is not a big deal in the Western states, but is relatively a large issue. And we've seen the leverage, we've seen actual bank deposits here in the United States go up as a result of that, right? We've seen bank deposits decline over in other countries, which is weird because the social sentiment and the actual follow through seems to be different, in the two areas, right? So we'll be covering that. Now, let's get right in. We've got a lot to talk about. I want to cover the markets. A lot of activity today on the ETF front. A lot of activity today in the Forex front. A lot of activity today. Not so much activity in the crypto front. Pretty much steady as she goes. So we'll get right to the charts. We'll analyze. We'll break everything. And then we'll get into the news. If you guys have any questions, make sure to leave them in the live chat. The moderators will direct my attention to them. And again, I hope you guys are having a fantastic evening. Let's go get this, guys. This button? I pushed the right button. Hey, what do you know? Things work once in a while, guys. Thank you so much. All right. So anyways, here we are on the daily. We've got Bitcoin currently trading at 67.42 over on, I think that's actually the Bitstamp chart. Sorry, this is FUSD perpetual on, how do I have no hair? How can I have a hair in my eye? That's so weird. Anybody? Anyways. Ethereum trading at 141.25. I swear if you would have just like gone to sleep Thursday evening at market close and Wednesday evening at market close around 7 p.m. my time, and you're just coming back to the markets now, nothing has happened. XRP, again, sitting similarly, stair-stepping its way up. But Ethereum, as I said, trading at 141.25. XRP trading at 17 cents, needs to get above 18 cents. And EOS sitting at $22.33. Over on the CME futures, we're trading at 6,800. Over at the CME futures, we closed today at 6,800. ETH Bitcoin sitting at 0.0209. XRP down at 2653 sats. And EOS sitting at 3453 sats as well. I want to hop over to the big markets. Look at the SPY. Sorry, this is the lower time frames. This is for our scalpers. Oh, no, I do not want to log in with my Awanda account. Thank you very much. The nerve of some people, you know what I mean? Oh, boy. All right. Okay. SPY ended up closing today at 248.19. The NASDAQ, the triple Qs, the ETF that we would use to speculate on the NASDAQ, ended up closing at 183.37. So again, just as I said, we did experience a little bit of a gap down and a negative close. Overall, it wasn't overall that bad of an inside day. We have a Harami formation on both, on all of the major markets, even the Dow, the iShares Trust, the IYY. You guys could also obviously trade any of the Ds. For example, the Dixie, the dollar index, is rising. Roughly, it's just been on an uptrend this week, up to 168 after the sell-off. Not significant. Gold is making a nice move to the upside. Silver is stalling out after an attempt to sell down. And oil continuing to move to the upside, right? Just fantastic absolute movements. West Texas also moving up fantastically as well. Leading again, some to be pretty much left in the dirt, right? T-notes, overall treasury bonds, looking at government debt, stalling out, just hanging up here in consolidation. Not a whole lot to do insofar as that market is concerned. So let's break it down by getting into Bitcoin. Again, my bullish bias does still remain. I am looking for a breakup at these levels. And as I got pretty nuanced in the analysis tonight as far as potential options to take, right? Because there really are two possible opportunities here, right? Overall, again, we are above the baseline. Signs are pointing to the upside here. So I'd like to see price up around 7,400 before I consider a significant rejection at this point in time. The key level to get over is going to be a roughly 69.28. Let's get over to the Bybit chart. We can see it a little bit clearer there. You can also see it on the BitMEX chart, but here we are. Right here. Really 69.38, 69.90, 7,000 if you want to be conservative, but trading over that level, I think, is going to be some pretty strong confirmation of a breakout at this point in time. Again, a lot of people are calling for a sell-off here, and I do think, listen, we are clearly at the top of a resistance range. Again, hedging at this point in time while keeping leveraged long exposure open is not a bad idea because you can simply close your hedge out if we end up closing above 69.38 is probably a conservative way to go about doing it. Again, I'm holding spot long. I've been spot long. I am in profit on that spot long. So it's going to take a pretty significant sell-off to push me out of profit on that particular position. And I still have leveraged exposure open to the upside. So looking for price to close here above 69.38. That's going to be some pretty strong confirmation that we are going to break up. Again, we've tapped this level of resistance 3 times, really 2 times after the initial formation of that, with this long-legged doji over here on the 20th of May, 2020. March. Not yet in May. If it is, I'd be a lot happier because it'd be warmer outside. Do you know what it did today? Do you have any idea? So this whole week, I have been working in the yard. I've been getting my bucket gardens ready. I fixed some shingles on my roof. I painted the siding. I'm washing the cars in the driveway. I'm mowing the lawn. I'm like, yeah, it's looking nice out, right? Now I'm picking out the wood that I'm going to use to build my daughter's playground play set this summer. And I go out today, and it's hailing. It's hailing. There's ice on my windows, which is annoying because just 2 days ago when I cleaned my car, I put the ice scraper up. So I gotta go dig that out of the roof of the garage. Fumbling around like an abominable snowman out there wearing nothing but a hoodie. Yeah, super smart. Anyways, that's what happens when you consume with work. And mainly the reason why I was consumed with work is because I've been working on these strategy testers for the premium members. Of course, premium members get access to the strategy testers that we're creating for the indicators. And one of the most popular ones that we built so far is for the Wada explosion indicator. And I've pushed the strategy tester for that. And I will be pushing a premium only version of the indicator. I have rewritten it The original version, the public version, is heavily based off of Lazy Bear's original work. I give him full credit in the code. He did a fantastic job porting it over from the original MQL4. But I have taken that and I've completely rewritten that algorithm and improved it, I think, so that I get something that's very, very different, right? Honestly, it's quite a different indicator. It doesn't actually do the same thing. So, well, yeah, you know what they say about the Midwest, right? If you don't like the weather, just wait a couple minutes. So, but there was, I noticed one small, it's because the position sizing is relatively advanced on these strategy testers, and it allows them to do so many robust things that you need to be able to do and test readily, algorithmically, for a pathways to profit system. And that's fairly difficult to code. It's kind of easy to manually test, but it's relatively difficult to code. So, but I finally uncovered that bug. It was tricky, and I pushed that, and that's going to make all the strategy testers in the future run so much better. And that was the holdup for the Mink strategy tester. So I'm going to be working on that. Probably not this weekend, because I'm going to be reorganizing my studio this weekend. We're going to have a completely new look come Monday. I've got some new equipment in. I've got some new stands in. So I'm kind of excited to do that. So we're going to be looking differently on Monday when we come live. We're also going to be working on putting out some pre-recorded content to try to spruce up the YouTube a little bit. But I hope you guys are enjoying the interviews from SFBW from last year. And we're going to be publishing the Mink strategy tester, the new Mink study, the new advanced Minks. So much is coming out over the next few weeks, all getting all of our premium members prepped for auto trading, which is going to be the next big thing that we release. All right. So with that being said, 67.42 is where we're currently trading at. So we need to see price a couple $100 higher. So if you're not in a position, this is not really the time to get in a position. You do want to see this confirmation price closing above 69.38. It's going to be a pretty strong sign. Again, I've talked about this pattern before, where we test resistance 2 to 3 times. We continue to form higher lows. And then what do? We wait for a candle close above our resistance level. Again, you can either enter there, or you can wait for a BPC or a rounded retest. BPC is often the best type. That will often happen quicker. That will often happen quicker, and you do need to pay attention to the chart to catch that momentum. But the other thing, is there a way to hedge against the weather? You can certainly speculate on the weather. There's not any reputable place where you can speculate on the weather, but there are unreputable places where you can't. Just find somebody who is, lives the same trader lifestyle as you do, and, make bets back and forth on whether, it's going to rain tomorrow or not, right? Now, what if we do end up selling off from here? Again, we are at the top of the resistance range. It is possible to do end up selling off from here. Now, again, I am overall bullish. We are above the baseline. Again, I think that there are a lot of fundamentals that are pointing there. Let's not forget the halvening, which is sitting right over here. I don't have it on the Bitstamp chart. I should. It's because it's because I'm lazy, and it's not I'm lazy. I overwork. I always delete it. Here's the halvening right here, May 13th, estimated time based on BitcoinBlockHalf.com. Here we go, 39 days, 16 hours, 44 minutes, every single day, every single second, 1 second closer to that delicious halvening, guys. And again, Google's trend searches on Bitcoin halvening continue to rise. And overall, I think that the global pandemic, which we'll be covering in the Bank of International Settlement story, is pushing us more toward a reality in a future where cryptocurrencies are more valued. If you guys want a hype cycle that drives the adoption and the use of cryptocurrency, turn on the news. Turn on the news, all right? It's not just quantitative easing until infinity, right? It's not just government is the source of value, MMT. It's not just money printer go burr. It's not just that. It is also, again, legitimate health concerns and fears over an actual disease. Again, whether that is as much of a danger, the handling of dirty cash or paper, but again, you combine that with any government or centralized authority's incentive to root out and eliminate the use of cash or any form of payment that they cannot control, creates a pretty strong use case for Bitcoin. As it always has, as it always will. So, anyways, on the daily, should we descend from here? Let's look at VPVR. We're on Bybit, but we'll just take in just take in this, and it's not going to be, you know, yeah, we really do want to be looking at the Bitstamp chart for this, so we can get a good feel. Again, I mean, the lower area of accumulation, we've already talked about this. It's a, you know, again, it's fairly wide. It's fairly wide. It's going to be closer to 5,900. In failing this, again, you know, our lower area of accumulation is going to be down around 4,000. Those are the two areas. I've talked about this before. When we talk about backing the truck up for long-term investments, looking for optimum areas to enter. But we're going to need to see a lot of confirmation before that fails. So right now, again, even 6,202, I would assume would be fairly decent. The lower end of the range, which I don't really actually want to see us go down below here, would be, of course, down here in the 5,600s, right? I would not like to see price below it. I don't really want to see price, you know, to maintain a bullish bias. I don't want to see price close below this low. I want to see us continue to form higher lows. I don't want to see us forming lower lows, which is not what we want to see. We are continuing to form higher highs. Agency says, do I think a significant amount of the liquidity being pumped into the system, especially that which goes to the public, will end up in crypto and precious metals? Absolutely not. Nope. I mean, some of it, certainly. But here's the thing. I think that the majority of that money, in quantitative terms, is not going to go to the public. It's going to go to the private. It's going to go to corporations. And the last thing that they're going to do is use bailout money to establish a position in cryptocurrency. So no, not really. And, you know, honestly, the last thing that individuals in the public are going to utilize that money for is they're going to use it to invest. The majority of individuals aren't good investors, right? The common person on the street doesn't have a portfolio, right? You know, having a 401k is not a portfolio, right? You know, they're paying these fund managers to underperform the market every single year. That's my take. So no, I don't think so. The 4-hour on Bitcoin also paints an interesting picture here. Of course, we have this candle, which is a bit of a cause for concern. We haven't gotten the massive follow through from it that I'd like. Again, we have this candle, but the volume is not overall relatively impressive. And so far, we have held support fairly well. But again, we do kind of need to see price go ahead and push off from here. Let's get to the daily. Let's look overall at what PTP is telling us. Again, WADA is positive. We do have some descending positive delta, but it is still positive delta. Parallax is bullish. ATR is falling off a little bit. As we can see, low volatility overall in these movements, except for, you know, this nice fake out and overall this doji candle. But again, the doji candle does not necessarily imply rejection. We need to see a sell-off from the doji, right? Doji just means generally that buyers and sellers are at equal strengths, right? So it means that individuals attempted to sell off, but they didn't have the ability. And Minx is, again, continuing to trend strongly to the upside, no cross under, and no exit signal. No exit signal really from anything. And of course, looking at the breaking Bitcoin system, we are good. We are above the continuation filter. The level to hold right now is 65.29. Actually, if we don't want to repaint, we want to go look at the level from yesterday. And we're going to be looking at 63.87 is the level to hold currently. Looking for reversal baseline bounces. That's putting us all the way down at 54.25, upper boundary of 55.43. 55.43. So looking for, again, those buy-in periods. We talked about that. We don't really want to see price below here, but if we do end up wicking down, limit orders here are not a bad idea. That is our current level of dynamic support. Descending to the lower time frames. Setting to the lower time frames, I don't really see anything here. We are just kind of right in the median of a range over the last several hours. You can see that Minx has just been oscillating around the zero line right here after recovering from this almost oversold condition right here, which was a decent buying opportunity. But we haven't gotten significant trending movement to the upside. Again, Wadatar is largely telling us, you can see with the chop, to stay out of this movement, and Parallax has been flipping back and forth. And again, with the falling ATR, that's not a big surprise, right? When ATR is relatively high, all sorts of trades, all sorts of trending trades or reversal trades have a high probability of success because price is going to move farther, right? When ATR is relatively low, as we can see right here, again, we kind of need to see a nice break to the upside or to the downside. We just need some sort of confirmation or volatility. Now, some people are going to disagree with me and think that I should be drawing a symmetrical triangle here, measuring down from these wicks. I don't think that is the case. I think that we see a consistent level of resistance, and I think that we see an ascending level of support here, right? So again, here on the lower time frames, we would want to see a break above 6,800, kind of be that early signal, and that's where I'll be watching for those. That's where I'll be watching for that BPC type setup, right? So ideally, what we'd want to see is a push off right about here until we close above 6,800, and then price comes back, and you would buy the retest and set your stop loss below this level right here, should that be the case. And similarly, if we end up breaking down from this level, right, you want to wait. Whoa, hold up. You want to wait for price to come back, test this area, and you'd set your stop loss where? Right about here, okay? In the case of a rejection. So Bitcoin's price, relatively simple, straightforward, and clear. Ethereum having a little bit more, again, low volatility, negative action, hasn't really moved for the last several days. Again, things are relatively bullish. Same thing, 1, 2, 3, almost 4 tests at that level of resistance and continuing to form higher lows throughout this area. So again, really, as long as we are forming higher lows above 125.63, let's say 126, I think the price is overall good. The confirmation again here would come from a nice break. We can get something like a 4-hour close above 148.85 would be good for taking price to the upside here. On the daily, again, overall trend is to the upside. Wadatar explosion is bullish. Parallax is bullish. Minx is also bullish. All our momentum oscillators and volume oscillators are pushing us to the upside. Again, 1.5 billion. That's Billy with a B. Tether, freshly printed, ready. So I want you guys to be ready as well. The only thing here that is a little concerning is, again, if we look at Minx, we are relatively high on Minx. Again, indicating that a little bit of since volume isn't too high, it does indicate a little bit of exhaustion. So again, a pullback, which we are currently experiencing, is somewhat in order. So let's see if we can continue to form a higher low out of this area. Again, looking overall for price to come down to maybe 135, 134. And we'll see if we can't get a nice turnaround from there. If we can get some nice hidden bullish divergence, would be very good to see. So that would mean that we want to form a higher low and have Minx form a lower low than, let's say, -6 would be fantastic to see at this point in time. Getting down to the lower time frames. Again, what do we see? Lower time frames, we're actually a little bit more oversold on Parallax, but again, kind of the same thing from Minx, right? Where we are channeling around this zero line and now dipping down into the negative territory. I think we do continue to see a little bit of downwards pressure here. Hopefully, again, still forming a higher low than 138. Ideally, 139.72 is really what I'd like to see. XRP the same. We talked about this as well. We haven't really broken any significant levels. Breaking 1820 is going to be giving us the long signal on the daily. Until then, coming down to the 4-hour time frame. Coming down to the 4-hour time frame. Again, we can see Minx in that same area. Not as high. Not really getting the short signal or anything here. Thank you, CV Time 1, for the follow over there on Twitch, my friend. Not really fully, overextended, ready for a sell-off, but again, overall in the green, up in this area, and giving us a nice cross under here on the 4-hour. So pullback here is a potential. Pullback here is a potential, but we seem to be holding well. So basically the same story. Moving to the Saturday, it's Friday, profit taking day. Traditional markets are closed. What do we see? We see not a lot of volume, but we can see high volatility. But generally, what do we see when we see volatility without volume? Not really substantial movements that we want to be putting a lot of faith or trust behind. We want to be kind of careful about watching those movements. Now, so going down to the lower time frames as well, looking at the perpetual contract for XRP on Bybit. Again, we don't really see anything else. You guys can see Minx coiling around the 0 line here with even less volatility, Parallax under. Honestly, I would be looking for upside here on XRP, which sounds odd. It's going to move in the same direction as Bitcoin and ETH, but just looking at the chart, I would actually want to see more upside out of XRP here moving forward. And pretty much everything that I said for Ethereum, for EOS. Now, again, looking at the CME futures, again, we've got our overhead big gap up here between 82.80 and 90.60 happening coming up. And just as I said, less than 50 days. Lower levels, significant levels of support down at 54.15 to 49.65. Next significant level below that is going to be 40.70, and below that 33.35. Just to make it very clear, 40.70 and 33.55 are areas where, yes, you do back that old truck right on up. Ethereum, Bitcoin on the daily, continuing its downtrend. Again, as I said, I do expect us to see a little bit of upside pressure from some of these alt Bitcoin pairings, but we need to get some confirmation above that. We have broken now above trending levels, and not so much with volume. The thing that's holding us back from taking kind of any of these altcoins trading against Bitcoin to the upside is the overall lack of volume and confirmation. As we can see here, Parallax is still bearish, Minx is still bearish, Wadatar Explosion is still bearish. We are above the baseline, but not above the continuation filter, putting us overall in this no trade zone with no confirmation. So, just being cautious that, there is the possibility that we just continue to sell off, that we break from these consolidation areas like Matic. I've been holding that short for like weeks, just waiting for some volatility, and the volatility is just not there. XRP Bitcoin, a little converse. Obviously, we had some nice volatility out of XRP BTC. We had this nice, buy up just a while ago, and this nice pronounced sell-off as well. So XRP BTC doing some different things than the rest of the BTC market. So been interesting to trade. Boris Bitcoin wants us to look at USO. I'd love to, man. EOS Bitcoin, kind of the same situation as XRP BTC over there. Looking at the traditional markets, looking at the E-mini futures, where did we close at? 24.80. Overall closing at 24.80, kind of in the same place. So listen, look where the CME market's closed in the same kind of chop consolidation. I expect Bitcoin overall either to have upside pressure here moving into the evening, right? But I would expect us come Sunday to be closing wherever we do. I expect that we're going to be closing right around here, right? Because look, it's just, I feel like Bitcoin's part of the index at this point in time. Now, again, I want Bitcoin to decouple itself and push to the upside. That's what I'm prepared for. But I do think that it is more likely that we end up closing price looking very similar to the CME futures here as we closed on the LTFs here. Again, nice volatility out of the CMEs. And where do we close? Right at the middle of the range. Looking over at Bitcoin, what do we do? We are right in the middle of the range. And so overall, I would expect us to, do whatever we're going to do over the weekend, sell off, pump up, sell down, move around a little bit, and overall end up closing right back around 6,700. So wouldn't get too excited. The only big movement that I'd really be looking for, if we're going to make a big movement, I think it's going to be to the upside. Otherwise, I think it's going to be a little bit of low volatility, which is okay for us, for us in the trading competition, because just steady as she goes over there. All right, but the SPY ended up closing a Harami inside bar. 248.19 is where we did end up closing at. Let's see here. On the daily, we are actually still bullish on the SPY. We need to see price below 226.97 before I'm actually looking to take the SPY short, and above 256.74, I'll be going for another long. That just is what it is. But again, overall, if we look for confirmation, Parallax is now bearish. ATR is coming down after a nice rise to the upside here. And Minx has now freshly crossed down on this current candle. So we got some work to do before we get a long signal. But overall, Wadatar Explosion is still confirming longs in this area. Again, very similar for the Qs. Critical level for getting long on the NASDAQ ETF over here. We want to be getting up above 189.95. Anything below 160. I don't know why that's in there. But anything below 169.55. yeah, we want to be getting 189.95 on the Qs to go long on the NASDAQ. Below 169.55, we'll be looking for at-risk shorts, and there's no confirmation. So we're in a no trade zone right now, pretty much on traditional markets. Except for the kind of the one opportunity that I took today, which is not really, I mean, it is certainly traditional, but I ended up shorting the VIX. I think we're going to continue to see the VIX move to the downside here. I think we're going to see silver continue to move to the upside. Unclear on gold. I think that let's cross our fingers, but I'm looking for silver to actually outperform gold here moving forward. And I think oil is going to continue to pump, right? I think oil is going to continue to pump. All right. We had our opportunity reject, right? If we were going to reject, we would have rejected after we came up, as I talked about, from this level and hitting this low level of supply right here. And where are we at? We're bouncing right above that. So where's the next rejection area? In between 33 and 38. And I actually think it's more likely that we hit the upper range of this, right? So looking at commods, I would actually expect to see more upside pressure here from oil. And overall, listen, if you wanted to pin me down, honestly, I think that probably what's going to be the trade of the next maybe 2 years is going to be taking oil back up to $80, right? Again, this is this is a trade of a lifetime, right? To take oil from where it was trading at, anywhere earlier in the year from about 50 to anywhere above $80, anywhere above $50, and taking it all the way down to 20, almost 20 on Brent over here. And any place where you were shorting the price of oil, it was one of the most fantastic trades in markets in a while. And I think that the next big trade is going to be oil moving up to $80. I mean, it's oil, man. The entire world runs on it. So, again, I want to thank my I was already feeling this way, and then I had a good friend reach out to me was kind of sharing that sentiment with me earlier. So he knows who he is, and shout out to you, my friend. Benjai, good to see you this evening, my friend. Robin from the Hood wants to know how to put more than one graph on one chart. SPY, Gold, BTC. Yeah, you need to have a paid account for TradingView. The premium account, which I have, allows you to have 8 charts. But the button to do it is right here. It's right here next to where you save watch lists. It's right here. You can simply select layout, and then you can choose. I think even with a free account, you can put 2 charts on, right? Yeah. Okay, we talked about oil, we talked about the Dixie, the Dow, gold, and silver. We didn't break down gold and silver as much. Gold, again, gold's looking good, but overall, we need to get above 1620. I don't know why this is looking the way that it is, but overall with gold, we need to get above 1620, 468, right? So we're almost there. We had 1618, 425, so we'll see what Monday brings us. And see if we're going to be getting long on Zao over here. Closes below at this point in time. 1588 are going to be putting us a little bit bearish again. And anything below 1553 we'd be looking to sell back into gold. But overall, I am feeling a little bit of upside pressure. But not with the same sort of volatility that I'm expecting out of silver. All right, looking at silver on the daily. We are good. We are long on silver. We're above everything. And we're above the continuation filter with confirmation. Things are looking good. Need to hold $14. $14 where we need to hold on gold. Definitely don't want to see anything below $12.94. I really don't want to see anything below $13. But overall, I think that silver is continuing to look good moving forward. With that being said, that covers most of the traditional markets. I'll try to get to your guys' requests here later on in the evening as we get there. It is 9:35, and I'm going to get there's kind of so much to cover, so much that I want to go over. Again, we're going to be talking about Binance and everything. I'm going to go get a quick drink. Just give us a few seconds while we hear a word from our friends over at Bybit. Again, blah, blah, blah. Sorry, guys. What was I saying? Yeah, I'm going to go get a quick drink. We'll be back in just a few minutes. Don't go anywhere, guys. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at bybit.crackingcryptocurrency.com and rest easy for a change. All right, and we are back. The first thing that I want to cover this evening is going to be an update. He says on one chart. So do you mean something like this? You hit the compare button up here, and then you type in the symbol that you want to add to the current chart. Like Bitcoin over the SPY. And then you get Bitcoin over the SPY. And you can hit this button, and then you can get gold over the SPY. Right? Like that. That's how you do it, my friend. All right, so the first thing that I want to talk about today is going to be an update to a story that we covered just last week, right? So March 26th, Binance had announced that it was launching a Visa-issued payments card that would let Binance users pay with crypto pretty much on the fly anywhere. Anywhere Visa is accepted, basically. But it does now seem that they have quietly scrubbed away any references to Visa as a partner or issuer of the card from any of their online content concerning the new Binance card product. All right, so here we can see, checking back at the official Binance blog post we looked at last week, we see that in the mock-ups of the card, the Visa logo is no longer seen. And where the blog post originally stated that the Binance card was issued by Visa and accepted by more than 46 million merchants, it too now has dropped the reference to Visa. There we go. Right here where it says the Binance card will be accepted by more than 46 million merchants offline and online in 200 regions and territories, which makes shopping with crypto easier than ever before. There used to be the reference to Visa in here. And we can see here is the official card.binance.com/EN. Exchange the world with the Binance card. We can see that the Visa stamp, but courtesy of the Wayback Machine, we can see back on the 27th of March. Here is the original website with the Visa there, right there for us. And of course, going to the web cache, the Google user content web cache, the announcement tweet from Binance's official Twitter account that did feature similar language about the Visa issuance has also been removed. But again, courtesy of the Google web cache here, we can see the original. Markup. An archived copy of that tweet can be seen here. It's a bit of a strange situation, seeing that much of the excitement that followed the announcement of the Binance card was generated over the specific feature of Visa as an issuer of their new product. But it's not immediately clear, however, why the language behind the Binance card and the use of the Visa logo from its promotional marketing has since been scrubbed. We don't know if there was never going to be Visa, if it was a thing, if there was some embarrassing miscommunication. Now, the block, as well as other crypto media outlets, did reach out to Binance as well as Visa for comments, but they haven't received a response yet. We'll be keeping an eye on this one moving forward. But if I were to speculate, I don't really think that this is most likely a publicity stunt from Binance. I don't think that they put Visa on there. Most likely this. So either they did or they didn't. But most likely something was genuinely misconstrued, right? I just don't really see Binance, fibbing about something like that, right? They've got a lot of things that they can announce. Maybe they did, but they already know, kind of not to put themselves in bad water. Thank you, Yorick. By the way, yes, that advertisement was completely filmed and shot by Jason for the most part. Shot by Jason, edited by Ben, with a little bit of voice acting from myself. Oh, yeah. That's all original in-house work. Huge props to Jason for filming and coordinating that. Now, our next story is something that we've been talking about frequently on the show. It's kind of all we talk about, really. And this is going to be the topic of central bank digital currencies. And it's been a developing trend that we've been closely observing even well before the current crisis appeared on the horizon, the current impetus, which is moving the world in a more determined focus toward a cashless society, and is giving governments and central banks around the world really all the impetus they need to push for cashless societies, which they already wanted to. And it seems that researchers from the central bank of central banks, the Bank for International Settlements, are thinking exactly what we've been discussing around the office in recent weeks, that the current global disease that is going around and accelerating the global adoption of digital payment systems, which includes central bank digital currencies, and it is exactly what we're going to be talking about. Now, the Bank of International Settlements, in their April 3rd bulletin, which was entitled COVID-19, Cash and the Future of Payments, explains how this current pandemic is changing how the public interacts with cash, even if there is little danger from actually picking up the bug from handling banknotes. And they write in here how, scientifically justified or not, the key takeaways of this paper are that end user concerns over cash being dirty or contaminated, again, whether it's scientifically justified or not, will still negatively affect the perceptions of cash in the public's eyes and lead to a change in behavior by users and businesses alike. And this report postulates that as a result of this pandemic, developed nations will see their digital payment infrastructure develop in the coming years, with more online, mobile, and contactless options expected to become available. Because after something like this, listen, I went to the grocery store earlier, and there is a line, and I have to stand this far away from the cashier and like throw my payment at her, right? And she's got her own line, and she's got to like throw the receipt at me. For real. It's getting serious out there, guys. Now, in this report, they go on to note that the scaling up of these solutions for digital payments across economies, unfortunately, is going to have, obviously, a severe impact on millions of people, particularly older, less tech-savvy individuals, as well as this so-called unbanked population. Of course, I don't think that it's going to be the nations that have the largest prevalence of individuals that are unbanked that are going to be making this push towards central bank digital currencies. Clearly, I see the United States adopting a CBDC far before the Democratic Republic of Congo, but the biz researchers describe the scenario the researchers describe the scenario in which the use of cash is widely phased out and just no longer accepted as a popular means of payment, calling this phenomenon a payments divide between those who have access to these digital payments or the ability to make these digital payments and those without. In reality, they seem pretty split on this. I'm not. The researchers admit in this paper that they do foresee a scenario where users reject these digital solutions en masse, and that would lead to a comeback for cash. But ultimately, the current crisis is going to call for the creation of CBDCs to be released to the public. Because the ramifications of this, we have no idea how long this thing will go on. We don't know if there's going to be multiple waves. We don't know how long this thing is going to hang around. And overall, the perception and how this is going to psychologically and emotionally affect individual consumers' spending decisions and habits and personal hygiene habits is going to have reverberating effects going forward for at least the next several years. If you don't think that things are going to be weird for a couple of years, you are dreaming, right? And again, it doesn't matter whether or not these things are scientifically sound. Because you have governments, you have individuals, you have Facebook, you have Twitter, you have all of these narratives being pushed, and the public conscience is accepting and modifying its ideas around what is being put out there. Again, whether or not it is scientifically sound. Okay? So this is going to have an impact on the broader economy and the spending habits of consumers. This is inevitable, right? Now, they describe this incoming technology or this availability of a central bank digital currency in most developed nations as necessary to bridge society's need for digital payment solutions with its responsibility to those who cannot easily access them. So essentially saying that, well, this is going to negatively affect a lot of individuals, especially those who are unbanked. But keep in mind, the Bank of International Settlements, the Federal Reserve Bank, the European Central Bank, your local commercial bank, they don't care about the unbanked, right? They don't, right? That's not a thing. Again, the unbanked are serviced best by cryptocurrency because even the majority of the poorest nations in the world, individuals can get access to mobile phones. And we've seen this throughout all of Africa. We've seen this throughout India. We've seen this through so many places, right, that are not economically wealthy. But the technology that spreads and becomes prevalent is mobile phones. And with mobile phone technology, you can fully use cryptocurrency, right? And remember, I said this at the very beginning of the show, the innovation and adoption in cryptocurrency, the necessity, the push, the need for cryptocurrency as a alternative payment solution and store of value that is better than your dollar, right? People are like, oh man, I can't believe, like, if somebody would have held Bitcoin, like, oh, they'd be down a whole 10% in a month. Right? Seriously, guys. But compare that to countries around the world where holding Bitcoin, no matter what, has always been better than holding your native currency most of the time, due to hyperinflation, due to availability, due to fraud, due to danger of getting and transacting in that currency, or not knowing whether or not that currency is going to be accepted where you go to buy supplies, right? And if you are working and you want to store funds or value away for your family, or you want to remit payments to your family, I mean, you can use traditional methods and get scalped, or you can use Bitcoin and send it for 3 pennies. Okay? So, central banks go on, the biz goes on in these articles to explain that they're going to tailor these CBDCs for the context of the current crisis by making payments, or by emphasizing that payments be contactless, but also making sure that they are universally accessible and making sure that there are alternatives to individuals that can't access them, right? So listen, here's the thing. These are going to be the tactics that they utilize to push the idea that CBDCs are going to be necessary. They are really not. They are really not. We'll get in here into a second about the downside dangers of these, right? As the report reads, the pandemic puts calls for the rollout of CBDCs into a sharper focus, particularly for the Bank of International Settlements, highlighting that end users are going to need access to a wide set of payment solutions, as well as remaining resilient against a broad range of threats. In other words, meaning that they are stating that they want individuals to have options, but they really don't. Like the Bank of International Settlements, central banks, local governments, they do not want you to have options. They want you to ideally be centralized and monopolized into their community currency, right? Again, this is why taxes have to be paid in United States dollars. This is because individuals are the source of value, not the central bank, regardless of what MMT would tell you. But this, indeed, what we've seen come out of the current crisis is calls for the distribution of emergency stimulus, right? Whether or not that is ethically justified, we've talked about scientifically justified, and this goes so far, insofar, even here in the United States, of the suggestion of the creation of a digital dollar and Cash App and Venmo, as we talked about just yesterday, stepping up to attempt to support or get the funds quicker, and talking about, again, individuals that are unbanked. Again, remember, the government doesn't care. If you don't have a bank account, you're not a real citizen in their eyes. Just tell you guys that right now. And this was this is temporarily floated by the Senate in the Democrats' version of the stimulus bill that was debated over. Right? And this idea of a digital dollar or a digital wallet infrastructure system appeared in at least 2 other bills, including one by United States Senator Sherrod Brown and another that was tabled at the House Financial Services Committee, suggesting the idea is indeed on the radar of policymakers here in good old America. Now, we have to ask ourselves, is a cash-based society sustainable in the age of coronavirus, right? And now let's go down here, right? Now, this article right here that I'm going to be referencing from CoinDesk is talking about, whether or not it is scientifically sound to be, concerned about the spread of cash. Overall, it doesn't seem as if it is the largest. There's not a lot of data on this. We know that the largest transmission of this disease is person to person, right? Regardless of the fact that it is prevalent on inanimate objects and surfaces. And, there is a lot of hullabaloo made about how dollar bills are extremely dirty, but the actual data on disease transmission via dollar bills is fairly scant. And again, largely fear-based and not actually quantitative, qualitative, scientific data that can be tested. Now, but again, that doesn't really matter when we're looking at trends or trying to speculate on how society will respond, because society is already responding with more fear against physical cash, right? And again, kind of the idea here from the International Monetary Fund is that cash, the physical object, is now potentially contagious, but cash, the financial asset, is still a safe option. As we see the actual deposits from depositors of bank accounts, we thought that we would see bank runs. I was concerned that we would see bank runs, right? But we've actually seen more cash stay inside banks here in the United States and in Western worlds as well. UK ATM withdrawals went way down over Western countries' concerns that cash was contaminated. Kind of opposite over in countries like Australia, where you actually saw withdrawals from ATMs increase and the use of cash increase. You know, I had some stuff on here highlighted. But Taiwan, stepping in on this, disseminating Taiwan's $2 billion stimulus package. Let's see here. Former legislator with the Taiwanese government who now advises on policy is advocating that the government set up a blockchain-based cryptocurrency deployment method to deploy this stimulus package. A lot better than what's going to happen in America, a lot better than what's going to be utilized in the UK. And the other issue, again, with central bank digital currencies, I mean, the big thing here is the threat for privacy, right? Again, it sounds great, but it's also an ingenious way to track users' potential exposure, in addition to being able, so we're talking here about the China QR code method, where individuals from the Hubei province, from Wuhan, were allowed to be released as long as they had this Alipay solution, this phone, and it had a QR code on it, green if they were good to leave, yellow if they'd been exposed, red if they were confirmed sick. And this sounds like a great idea, right? Again, the analogy used in this article is, if you know that somebody in a train has been exposed, you don't need to test the whole train. You just need to test the train. You just need to test the train car. Okay, there's a lot of sense to that. But the problem here is that Alipay's health code tracking and tracing grants the Chinese government a wide open backdoor. New York Times investigation found that the program forwards the user's location and personal information to servers at every scan point. And the forwarding function's name is report info and location to police. Right? Now, if we swap government for Facebook, this reality may feel a little bit closer to home. And I like this quote right here. It says, you have the Chinese system where the government spies on you and knows everything that you do. And you have the American system where companies spy on you and know everything that you do. Well, again, I know that I'm certainly not the only one who feels like this, and I know that individuals disagree with me, but there is a huge difference between government, which have the monopoly on the use of force and can kill you legally, and corporations, which cannot, right? They still have to sneak around and tiptoe through the tulips, right? And, realistically, this is like a cliche, but who would you rather have? Who would you rather have, people, if you asked most people this, right? Who would you rather have out for your blood, right? The mafia or the full weight and power of the federal government? Listen, both options are bad, right? But with the mafia, you can bargain, you could bribe, you can fight back. You cannot, it's fairly difficult to fight back against the overwhelming force of the federal government, right? They are relentless, right? They got dudes lined up who do this 9 to 5 every single day. They're never going away. I just keep coming for you, man. Now, the nice thing about this is that we don't really need these solutions. We're going to see them, of course, but we need to continue to advocate that there is already a better solution, a decentralized solution. You've got Bitcoin, you've got Ethereum, you've got all of these options. Now, interestingly enough, researchers found that fears surrounding cash on hand amidst the current crisis is manifesting differently from country to country, as I referenced here briefly. Now, cash circulation is supposedly surging in the US, with clients rushing to withdraw cash, while in the UK, ATM withdrawal volume plummeted, right? Turns out Not so much in the United States, actually. ATM withdrawals did not spike as much as previously suggested, and bank deposits actually increased. And while some central banks sterilized entire reams of banknotes, others asked retailers to stop refusing cash or called on the public to place science over fear to keep cash circulating in their economies. Right? Now, fears over the viral transmission via cash, as I said, seems to be more prevalent in countries with smaller denomination bills, such as the United States, the UK, and Australia, and others, based on a major uptick in Google search over the last 30 days, suggesting that citizens in countries with larger denominations are not so much, and citizens in these countries are more fearful of cash fiat relative to countries with high denomination currencies, right? So countries with smaller bills that are used more for day-to-day transactions are more concerned with disease transmission via cash exposure, hand-to-hand cash transmission, rather than countries that have relatively larger denomination bills where they're not used for smaller purchases. So again, mostly East Coast, West Coast, it don't matter type thing. But yes, that's overall the sentiment there. So again, very important, something that we've been talking about. Yes, as I talked about, never let a good crisis go to waste. And of course, governments around the world and central banks around the world are going to be utilizing this opportunity to attempt to push on you a central bank digital currency. And here's the thing. They are overwhelmingly likely to succeed. We are unlikely to see a future without a central bank digital currency. We certainly could, but it's very unlikely that we will. The important thing here is what you do in your personal life, what you believe in your personal mind, that you understand that you have other alternatives, that you understand the danger, and that you continue to advocate and educate those around you and yourself on what is actually the better solution. Because with great power comes great responsibility. And unfortunately, this is just too much power. Money is sacred. Money is necessary for commerce. Money is necessary for transaction. The ability to transact value remotely, digitally, trustlessly, privately. This is what's absolutely essential, and there is already a safe and secure method to do that allows one to retain their anonymity and privacy. And again, once you give up your anonymity and privacy, it is very easy for them to continue to take things away from you. That's why anonymity and privacy are important. Many people gloss this over, but those are really your first things. Those are your first lines of defense before the things that are more sacred to you begin to be taken, such as your personal liberty, your personal freedom, your freedom of movement, your freedom of speech, your freedom of choice, your freedom of commerce, your freedom of who to transact with who you want. All of these things can and will be taken away from you, and they all start from your privacy and your digital security being taken from you. Those are your first lines of defense. And that's why those are the canaries in the coal mine that we utilize to understand when government is becoming tyrannical, when government is beginning to encroach in our personal lives. Because those are the things that are very easy for people to say, oh, that's not very important. I'll sacrifice my digital privacy. I'll sacrifice my financial privacy for security, right? It's too much. It's too high of a cost. It's too high of a cost. Let me know what you guys think down in the comment section down below. With that being said, we're going to go back to the charts. We're going to take your live questions. Of course, remember, if you guys are watching on YouTube, to subscribe, but YouTube has moved away from the subscriber model. So if you do not click the bell icon, there is no guarantee that you will receive notifications when we go live every evening at 9 p.m. Central Standard Time. That's about it. What I got. All right, so our first question for the evening, is from Jai English. And Jai English asks, when trading Forex with small capital, were my trades smaller in candle periods? Now, the way I'm interpreting this is, when trading Forex with small capital, were my trades shorter in length, right? As in, did they occur over a smaller number of bars. And I need a little bit more data here, so I'll attempt to answer the best that I can. So the first question and the first thing that I wonder is, the result of the trade doesn't really matter pursuant to the amount of capital in the trade. Right? The reason why I teach and advocate that individuals who are new to a particular type of market or trading strategy begin following the backtesting process by live trading with small capital, and the reason why I think that is superior to paper trading is that it gives you a little bit of skin in the game, right? Not a lot, $100, it's really all you need, but it's enough to get your blood up, which is what you want to train your brain against, because when you're trading with $5,000 or $10,000 or $50,000 or $100,000, your blood gets hot. This game gets your blood hot. And over time, you'll take a $75,000 trade and not blink your eyes, right? But you don't start off that way, right? You don't start off that way. It takes time, right? You just got to be very, very trustful in your system. So overall, I'm not sure that small capital plays into it. Now, I think the overall question here, the only way that I can interpret this that makes more sense to me is that, compared to cryptocurrency, I'm assuming, do I find that Forex trades occur over a smaller period of time? No, not really. It depends. It depends on the volatility of the market, right? And it depends on the volume of the market, right? The more volume and the more volatility, which means actual trending movements, then typically that trade will go longer than trades in low volume, low volatility markets. And as market cycles ebb and flow, sometimes the Forex markets are highly volatile and highly volumetric, and sometimes the cryptocurrency markets are highly volatile and highly volumetric. So unless I missed something there, that's what I got. Thank you, man. Good question. Robin from the Hood says, how do those tethers get minted? On what basis, and what can we take out of it? So according to the Tether Treasury's official website, Tether comes into existence when you contact the Tether Treasury and exchange dollars for USDT, right? That's how it works. So you call up the Tether Treasury. You're like, hey, I'd like some Tether. They're like, cool, how much? And you're like, I don't know, 1.5 billion. And they're like, yeah, sure, no problem, man. Send 1.5 million, wire it to this bank account. And you're like, okay, I did that. And they're like, okay, cool. What's your USDT address? What's your Omni address? I'm just going to send that right on over to you. That is the official statement of how USDT comes into creation, right? USDT can, listen, there's a couple other ways. Like, for example, CoinMarketCap, not too long ago, recently had a big spike in USDT's market capitalization. And it wasn't because Tether actually minted more Tether. It was because they began calculating the Tether on the Tron blockchain, and that resulted in the large increase. So generally, not always, but generally, following a large printing of money, Bitcoin's price moves up. Bitcoin's price moves up. Yeah, maybe not immediately, but overall it does. And so generally what it would signal to me is that certain individuals are preparing to begin accumulating spot positions or long-term positions in different digital assets, right? And of course, Bitcoin being at the top of that, right? But generally, I consider it as a bullish sign. Boris Bitcoin says, hey, can I take a look at the USO, the United States Oil Fund? Certainly. Yeah, I am relatively bullish on oil, right? This was not my particular trade right here. All right, going with that. But you know what? I'm not going to lie. I would like to establish a position in oil. I would like to establish a position on oil. And it's kind of one of those things where really, I mean, long-term trade. Really long-term trade. I mean, I see oil back up here. Now, I mean, I would prefer to trade the commod or crude, but, or Brent, or West Texas is how I would prefer to speculate on oil. Not really this way. But yeah, I think that oil is going to be one of the best trades. Again, doesn't mean that we can't see significant drawdown, but I mean, the idea that oil, the more I think about it, right? The idea that oil is not going to get bought back up over the next 2 to 5 years is ridiculous. The world runs on oil. And how many electric cars do you have? Come on. Everything runs on oil. So, so breaking the BB continuation filter on yesterday's daily candle close, we now have parallax confirmation. Minx reversal style actually signaled for a long over here. We had a little bit more of a dip. Again, putting you in profit now. Back above the continuation filter, I think that things look good. Obviously it's not even post market now, so we're gonna have to be waiting until Monday. But let's see, right? I mean, I could see setting some bids, down around 455, maybe even $4. I doubt that we get back down there, but just in case that we do, I mean, that's the area where I would definitely like to pick up oil. And let's just watch it closely, man. I think that with oil, I think there is plenty of time to get some nice long-term positions in oil. So I would start, what I'm probably going to do is start DCAing into oil positions. Bentley crude, baby. Kind of hard to be bullish on oil when the world economy is on shutdown. No, it's not. Super easy. The world economy is not going to be on shutdown forever, man. I mean, I'm talking, like I said, next 2 to 5 years, right? Oil is going to go back up. It's oil. The world runs on oil. And it's a limited resource. It's not infinite. We can't just print more of it, right? It's going up, baby. Yeah, that's why, listen, if you bought here, you might watch it tumble back down. But overall, I think that if you accumulate dips and go about it very rationally, I think it's a good trade. But at the end of the day, impression. Yeah. Understand the concept. Boris, so that depends on whether it is a initial signal or a continuation signal in regards to the qualification line, right? So if it is a primary signal, if it's the first time I've gotten a long signal, then I want to be within that qualifying line. There are not too many times, but once in a while that I'll look to take that. But if it's a continuation signal and we've already established that price is bullish and I'm just looking to get back in, then we tend to ignore those things. We also tend to ignore volume or volatility. Caleb's like, hey, you just haven't covered the Aussie and I missed it? Coming in here talking like a New Jerseyan, man. No, I haven't covered the Aussie dollar. Let's go take a look. How you doing, Caleb? Hey, you guys talking about the Australian dollar in here? No trade zone, bullish bias as we're above the baseline. In fact, there is a reversal baseline bounce setup, but depending on how we close or really open on Sunday is going to determine the direction of the Aussie dollar for me. No trade zone for me, except for the potential reversal baseline bounce reversal trade, where I'd be looking for a target of roughly, let's take a gander here, about 0.609. Overall, for a trending trade, I want to see price close above not 0.61477. Otherwise, I need to see a daily close breakdown of not 0.58351 to be taking the Australian dollar to the downside. We look to see weakening. We clearly see weakening volume delta divergence coming in from Wada-Atar explosion. Parallax confirmation has flipped bearish. Of course, Minx is in the bearish aspect of the trend and about to curl back down. So my sentiment would be to do nothing. My sentiment would be to watch for a breakdown, though. Kind of got to keep our eye on the Dixie, though. Dixie's been rising up, but it's relatively weak compared to the sell-off. Putin said he could keep oil at these levels for 6 years. I'll call that bluff, man. Again, I'm not saying that oil is going to go up tomorrow, but I'm saying in 2 years the price will be higher. The pie guy asks, if one were to dollar cost average into buying some coins, and one hated Coinbase with a genuine passion, where would I buy crypto? Well, if it's just Bitcoin, I'd use the Cash App or Kraken. I'd use Kraken to dollar cost average into positions. If you wanted to deposit USD or your native fiat, again, assuming that's like the British pound or the euro, and DCA into your coins of choice. Robert's from Jersey. Agencies from Boston. You to practice your Aussie. Come on. Yeah. What's Cash App? An app for cash? You just go to. If you hit me up in the Discord, man, I got a link for Cash App. I think we each get $5, or you could just go to Cash App, man. Do I think Bitcoin's bottomed? No, not really. But I don't think we're going to break down. I don't think that we're going to go lower than our lows from here. I think we see higher prices. I'm bullish. I mean, it's, I still got this sneaking suspicion in my head that we haven't bottomed, but everybody says that. So you almost got to counter trade that. For me, things point to the upside right now, right? I don't think we're going to see a lot of significant movement. Even if we do see some downside pressure over the weekend, and again, I'm willing to be wrong, right? That's okay. But I do think that we end up, the next larger significant move is going to be pushing up from here, right? We'll see. Don Candon says, that cracking crypto is on the verge of bankruptcy when the owner can't afford a nice mug and is drinking water from pickle jar. So, sir, this is a mason jar, and I like drinking out of mason jars. I've been drinking out of mason jars for years. But yeah, man, I mean, we're certainly destitute, bro. I mean, if you could upgrade to premium advanced, then I'll be able to make my mortgage, dude. All right, what about the dollar yen? The dollar yen actually looks pretty decent here. I'm not going to lie. This is a continuation trade. We don't have confirmation, though. So if we look at Parallax is telling us to hold off here, right? Now, we don't necessarily need to look at Wada-Atar explosion, but it certainly would help. And we can also see that we don't have the confirmation there either. So, I mean, fully qualified here. We did close below the baseline, so we do need a full indicator reset here. So ideally, we would want to see all cylinders firing here. So yeah, entry zone is going to be below between current price and 109.392. So I could see some upside potential here from the dollar yen, but it won't be a trade that I'm taking. Water, more like white lightning. Of course, man. I drink water around here. Straight vodka, dude. We got to keep the bugs away, man. No bugs away with water. Stay hydrated. Stay dehydrated. Mario 80503 asks USD Mexican peso. All right, so listen, full disclosure, not a currency pair that I trade. I have no idea how my system's going to perform on this currency pair. Every currency pair that I trade and generally analyze, I've tested my system on all of them. I don't trade the dollar peso. I don't trade any peso pairs. So just full disclosure. But having said that, okay, so listen, Minx is in the distribution area, right? We can see that Minx is very high, right? When Minx is very high, it means that this is a pretty good time to sell relatively. And you have to wait a while, right? For an indicator reset, right? In this case, on the daily time frame, maybe a week or so. In Minx's case, 10 days, actually. So, but 2 weeks is always better. So I'm going to be pretty skeptical about taking this to the upside. With that being said, there is continuation on today's daily close. So I would be watching Sunday's open relatively closely. We have parallax confirmation, closing back above the baseline. We never closed below the initiator. So we never actually got any kind of short signal. Even with the sell-off, we held the baseline, reversal baseline bounce multiple times. And overall, we are in a bullish trend. And generally, you expect the herding effect to continue a bullish trend. Right? With that being said, I want to, again, Minx is also crossing back up. So that's another continuation signal. With that being said, this is still overall a highly priced area of this currency pair and generally a decent time to sell, especially if you accumulated low prices or have been speculating this to the upside. That being said, this would be something that I would look to take a long trade on at this current price were I trading this pair off of this daily close. And I would be looking for, well, let's see here, do we have any weird ATR? No, it looks pretty good to me. So I'd be looking for upside of about 25.83, 26.66, 27.49 with invalidation at 23.76. And should we close below 24.26, I would also be out of the trade. Midwest is like, Don, do you think that's positive, man? Are you sharing your positive feelings right now? Is that constructive? Do you have something you'd like to share with the class? Ice cold, man. Computer text like, I don't know, man. Those blue foam stripes behind him look expensive AF. I'm not gonna lie, these weren't cheap. But my whole wall, the whole wall is blue and black. The whole wall. And that wall. Yeah. Sounds more like a hot prickly than a warm fuzzy. Thought it was a cold prickly. Cold prickly, warm fuzzy. What's that from? Was that from school or is that from a movie? I feel like they taught us that in school. Maybe it is a movie. I don't know. The pie guy, what country's economy is going to collapse soon? Which country? Which country? Right, you think like, maybe like, think like the International Monetary Fund is just sitting there like with names on a post-it like Congo, no. France, Spain. You guys did You guys always were real jerks when it came to football. We're going to put you on this special list. Watch yourself, Spain, right? What country's economy is going to fail? Most likely not any of the ones that you'd think, right? So I don't think that in the short term, we're going to see Canada or the United States collapse. And I'd be very surprised to see a country in the European Union collapse without global conflict, right? Like the European Union really needs to like hold its vassals together. And I do feel like, here's the thing, right? There's this fantastic documentary on the Holy Roman Empire. And if you guys don't really know anything about the history of Europe, and again, you know, people from Europe always get mad. I don't care. You know, people always get mad because, you know, people from America are like, you don't know anything about my country, right? But Europe has so much history, right? And the Holy Roman Empire was so, you know, like fundamental, you know, instrumental in the formation of the countries that eventually segregated, right? Like you look at, you know, you look at the Netherlands and Switzerland and the German areas, Austria and Prussia and France, and the other areas of Burgundy, and, you know, Italy and Spain and all of these areas, right? Germany was the Holy Roman Empire was extremely instrumental in the formation of these countries. And, you know, since then, right, we had a lot of independence, and of course the 20th century and World War I and World War II and the Cold War, and, you know, the communist threat and the resurgence of and the spread of socialism and communist thought across those countries, and the spread of postmodernism. And now, you know, you've got the European Union, right, which is good for trade, but unfortunately locks almost all of those countries out of the benefits that they would have, that modern monetary theory says that you have from the sovereignty of your own currency, right? So, you know, was it Italy had a huge debt crisis? Didn't matter because they had the ability to print their own currency, right? The reason why the Greek debt crisis was so bad was because they didn't have the ability to print their own currency, right? The reason why the United States debt crisis isn't that bad is because we have the ability to print our own currency. But here's the problem, right? Like, in the end, and what I think MMT ignores is that none of this stuff is based on the fact that money printing is good or that you can print yourself out of issues. And well, I think the overall misconception is that value comes from the government or the state. It doesn't. It comes from the goods and services produced by your citizenry, right? You know, like if you have 10 individuals in the mud and, you know, one mud person stands up and says, I am now, you know, the president of us, the mud people, and I am now going to print our currency. Well, nobody's going to accept your currency, but like nobody's going to consider you legitimate. But if you're king of the 10 mud people and you also have like a magic box that can, like if you have the death note, right? And you can just kill anybody by writing their name down. Well, then every country around the world is going to bend to your whim. Why? Because you have power. That's what MMT is missing, is that all of this is based around power, right? The reason why the United States dollar is the most valuable currency in the world is not only because we facilitate the most trade, but because we have the most powerful military, right? And countries with a powerful military get respected and get recognition on the global stage. So I don't think that the European Union is going to allow any of its its member nations to collapse economically without seeing some sort of armed conflict, right? Which is what I'm concerned about moving forward, right? Long term, you know, like what follows big events, big catastrophic events like this, right? When governments get themselves into a lot of debt, when countries get themselves into a lot of issues, when debt and the economy becomes an issue, you know, what got us out of the Great Depression? It was World War I, right? So, I mean, that's really what I'm concerned about, right? And I don't know if it's going to happen or not, but, you know, there are things that I watch to kind of let me know if we're heading toward war or not. And I don't see anything that would indicate that we certainly are at this point in time, but, you know, most likely the tipping area, you know, something, you know, probably the most likely thing is that we see some sort of, we see some sort of conflict in the Middle East, and, tensions get inflamed between the United States and Russia. But yeah, they both have a vested interest not to get into each other, right? Or we see something pop off in South America, or we see something pop off in Southeast Asia. So again, just the way that World War I and World War II started, right? It's never generally the very large nations. It's generally petty squabbles that lead to larger issues, right? So that's what I'm concerned about, because, none of us have lived through a World War situation like that, right? And it's going to be so different and so catastrophic and devastating. So that's overall what I'm just scared about, just as a father and as somebody who's really come to enjoy life, and, has become pretty hopeful of the future moving forward, and the technology that we've invented, and the interconnectedness that we've formed, and the international communities that we've formed. And, it's just really going to suck to see that knocked down, right? But did not hear. We're in a war against an invisible enemy. The invisible enemy is inside. Don't look. Right? Yeah, I mean, and ideally, it is kind of nice. Listen, regardless, all the tinfoil hat people come out, and I don't want to go there, but it is kind of nice to see, some form of international cooperation right now, right? It does seem like I'm seeing a little bit of overall cooperation, right? Even kind of locally, right? People are, at least where I'm from, right? People are being pretty decent about this whole thing, People aren't, raping and pillaging in the streets yet. And I hope that they don't. So we'll see, man. But, if things get worse, then things will get worse. So, and that's kind of the point of this show, and why I do what I do, and why I do the show every evening, is so that I can do my best to educate you guys on, or just best, it's just good for me to have an area to share my thoughts and my feelings, because I get so many people that DM me and they're like, hey, I thought about what you said, and here's some information, or here's some advice. I mean, this really is a two-way street. So, you guys with your feedback is very, very helpful and appreciated. We looked at the dollar peso. ReviewSilly.com. I read your YouTube name and I was like, Expedia.com. ReviewSilly.com. Can I take a look at APA? On the SPY 500, Apache, one of the lowest valued stocks. Small cap stock of the S&P 500. All right, let's take a look here. Well, yeah, that's going to be a hell of a reversal trade on Apache. I mean, look at that. Hey, zoom out, like the border goes away. Oh, man. Negative 83%? Estimated. Okay. So on the monthly, listen, we're obviously bearish. We're below all significant moving averages. We've gotten significant death crosses. Now, where did the 1355 cross occur? Occurred right here. And actually, interestingly enough, this is the monthly. What am I talking about? The weekly. Where did the 1355 occur? Occurred all the way back here. And let you know that the bear market was beginning. You didn't miss any of it. As opposed to crypto that moves so darn fast. So listen, we've got a lot of work to do before we're trending bullishly on this on weekly timeframes. Kind of a no trade position. I mean, if you're feeling bullish on ARPA, I mean, not a bad time to begin dollar cost averaging over the next 6 to 9 months into traditional markets, right? Just being realistic, right? As far as trade setups, looking for something right now, I don't see anything here that I would really want to buy. I mean, we have this nice doji on the weekly indicating that, kind of buyers and sellers have kind of equaled out. We had an attempted pump back up. We've kind of thrown these double wicks into the downside, a little bit of a kind of a spaced out tweezer bottom pattern here. We do have this pretty significant weekly gap up here. We see what price does when we come back up to the $13 to $19 area. That's a big move to the upside here. That's almost a 200% movement to the upside here on the weekly time frames, and it's possible that we get there. It's possible to get there in the next 2 years. It's possible to get there in the next 9 months. Unlikely. Maybe positive, some volatility until earnings here on the 27th. I have no idea what they're going to look like. I don't think that it really matters what any company's earnings look like. On the daily, I wouldn't really want to do anything below 833. I'd be looking at these areas, these moving averages, as opportunities to reshort. So the first one coming up in the form of the 13 EMA at 595. And it seems like we have got a ton of work to do on the daily. Yeah, I'm not going to lie. The daily says there might be a trade. Yeah. It's pretty fascinating. But anyways, okay, yeah, there's a possible long trade on here. Parallax isn't there for confirmation, so let's see what Market Monday looks like. But if we do end up getting a trade, just on the daily and the short term, we'd be looking at 680 to 964. So this has got to be a low risk trade coming off these bottoms, because you're looking at like 80% to 40% risk to reward. So now that Apache has become like a small cap penny stock, I'm just kidding, but you get the point. Just use your head, man, and use low risk. So classically, you would be looking for a break on the daily above 613 to confirm this W bottom. So getting a nice daily close above 613, and then I'd be setting a fairly conservative stop loss right there, about 531. We were able to get that nice break. And yeah, I mean, I would be shooting for, I'd be shooting for that gap, 1364 to 1977. And I just take the L if it comes back down, and I just keep shooting for it, man. Keep shooting for it. Use low risk. All right, guys, it is 10:36. It is Friday. It is time for the weekend. Thank you guys so much for joining. Huge shout out to Ricky T, Benjai, the Pie Guy, Robin from the Hood, K7 Jixer 1000. Always coming in to drop them sick one-liners. Calum Jai, Sci Flyer 67. Midwest Attempts and Crypto Jack, as always. Michael Pell. You got Wayne. Don Candon coming in here for some sick one-liners as well. Mr. Ether, Computer Tech Tutorials. And anybody else, if I missed you, I apologize. Thank you guys for all the support. And thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. I'm your host, Justin Wise. I'm the lead analyst and senior mentor at crackingcryptocurrency.com. If this is your first time to the channel, make sure to subscribe and hit the bell icon. Otherwise, YouTube will not notify you as they've moved away from a subscription-based model. So if you do not hit the bell, there is no guarantee that you will be notified when our content goes live, which it does every single day. You will also enjoy following us on Twitter and Instagram, where we post exclusive content you will not find anywhere else. If you guys would like to join our trading community, the place to go is in the Discord, discord.crackingcryptocurrency.com, where we do post free trade signals and we do engage in general awesomeness and banter. And of course, if you guys are beginning your journey to profitability and you guys would like to take advantage of our premium indicator suite, our education, the Pathways to Profit course, community mentoring sessions, so much else. Our risk management position size calculator, our trading journal, automation coming out soon, everything that comes with membership. Make sure to check out what we do at premium.crackingcryptocurrency.com and leverage our resources. I want you guys to trade safely moving into the weekend, manage your risk, and trade responsibly. We will be back Monday at 9 p.m. Central Standard Time for your next evening breakdown. Look forward to our pre-recorded content coming out this weekend. You guys have been fantastic. You're awesome. Thank you guys so much. Trade safely, and I'll see you guys on Monday. Cheers.